Hi there, welcome to this week's Dividend Cafe. We want to kind of recap quickly for you some events in the market this week. Once again, you may be able to tell we're out of the office. I'm actually here at another client dinner event, a similar thing to what we did last week where we taped Dividend Cafe from, and now we're doing another event of the same talk, recapping some of those meetings we had with money managers in New York a couple weeks back. But as far as this particular week goes, we're well into earnings season now. 90 out of 500 companies in the S&P 500 have reported earnings results in the third quarter. The market's up on the week, and it's largely been led by oil. Oil prices hit a 15-month high this week, going all the way back to July of 2015. Crude got up to $52 a barrel. So, by the way, for those counting, the February low was $26 a barrel. We literally have now doubled the oil price from the bottom earlier in the year. I have a section in the written Dividend Cafe that you'll see over the weekend on our website that you may want to check that deals with the talk of this supply glut and this excess oil we're going to have forever and why that would hold oil prices down. And it's kind of making the argument that we may end up with an actual supply shortage in 2019, 2020, because there's been so many production cuts going on now, it has this lag effect for future supply. So it's kind of a fascinating dynamic. But as far as the overall story for the market, financials have all been just crushing it in earnings season, dramatically outperforming expectations. The materials sector has done quite well. Some of the other sectors not as well, some technology disappointments. But it's early in earnings season. We really start getting heavy in results next week and the week after. And we'll see where it goes from there. I don't expect a lot of macro events to be driving the market right now, short of a very unexpected development in China. Certainly, I think the election is very well priced into markets on both fronts, the presidential side and the congressional side. So it's earnings right now, earnings driving the market. And we're going to continue to monitor the oil price and those correlations, see if we want to take a little back off of some of our energy exposures. But for now, we like it a lot. I would encourage any of you to reach out to us by email if you'd like to see kind of our longer form notes from our meetings in New York. There's a lot of charts, a lot of summaries, and I confess there's a lot of jargon and kind of higher level vocabulary in there, but I think it's an interesting kind of set of summaries and research and so forth that may be of interest to you. So that's our story here with the market. We are preparing for a rather significant rebalance, wanting to take some of our high yield bond exposure down a little bit and implement some other credit fixed income that we think has a better risk reward profile in this environment. And we expect to do that by early part of November. So please reach out with any questions, and thank you so much for listening to Dividend Cafe. We'll look forward to seeing you again next week. Bye-bye.